Welcome back to the show. So I'm super excited to be bringing on my guest today, Brian Grimes. Brian is a real estate investor who has done over 300 BRRRR properties. So he is really experienced and he has a lot of interesting strategies when it comes to real estate investing. He's also a financial planner. So he's really in the know when it comes to, dealing with your finances, investing, and just generally building up a good income for yourself. So Brian, I'm excited to have you on and I want to welcome you to the show.
Thanks for having me. Really appreciate it.
Yeah, absolutely. I'm excited to have this conversation with you. And before we get started, Brian, would you mind just kind of giving us a little bit of a background about yourself, how you got started in real estate, and
Yeah,
just kind of an overview of how you got here to this point?
yeah. I'm a Philly basketball guy at my core. I grew up during the Allen Iverson era, so everything was all about basketball in Philly. I grew to be I'll say about 6'5" by like 13, 14. So I was nationally ranked. Basketball kind of took me everywhere. My first high school game, they flew us out to Akron, Ohio to play some guy named LeBron James. So that was crazy, and like a sold out crowd there, playing a bunch of nationally ranked teams. Basketball took me all over the place, landed me at Columbia University. So I still rep my Columbia blue frequently. But got introduced to a lot of good mentors there, guys who were former athletes making a lot of money, more money with their mind than they ever, imagined they can make with their body, even had they played professionally. And when I graduated, I didn't want to go into like that investment banking path that they were railroading a lot of the econ majors into. I wanted to be my own boss. I wanted to call my own shots. And that resulted in me becoming a financial planner, working 100% commission straight out of college and kind of eating what you kill. I probably made 6 grand my first year. But I had a buddy, one of my best friends. He was into real estate. He graduated from like University of Delaware before me, and he got into real estate. And it was our conversations, just constantly talking about it, seeing some of the success he was having early on, that made me know like I want to do this. I got to do real estate. So every dollar I made in commissions, I was just saving in a separate account to go into real estate. And I ultimately ended up, after 2 years of saving, planning, doing a house hack, getting my first multifamily, and just like never looking back. And since that point, it was more and more properties until I could jump out of the 9 to 5 and just do real estate full time.
That's awesome, man. So you have a pretty cool background. I think really unique to it's for us all here. So just on that, being an athlete, right? So being really at the top of your game, it sounds like when you were playing basketball, you know, what would you say as far as like takeaways that you could potentially take from, because there's a lot of, I guess, parallels between being an athlete and being an entrepreneur. So as far as when you were first getting started, what were some of the takeaways that you had, just in your professional or your athletic career that you actually took to your business?
Yeah, that hardship is always going to be there. Whenever you're trying to do something great, there's going to be some sacrifice involved, and there are going to be roadblocks that you run into, things you have to push through. And I think one of the biggest things, I was lucky to get out of sports that I think even today's generations, like the younger generations, will have hard times getting access to, is just delayed gratification, because there's so much internet. What your smartphone could do, your desktop computer in the late 90s could not do what your cell phone can do now. So the amount of access that you have for immediate gratification, it just kind of eliminates that whole process for most of the younger generation. So taking that delayed gratification attitude, how I got good at basketball was by doing the same thing over and over again for years and years and years. Like when I first started, I sucked. I was the worst, right? So going through that process of getting good at something, you can then apply that process to almost anything. So if you apply that same focus to real estate and that same energy, you can achieve it. The good thing about real estate is it's non-physical completely. Like they say, sports is like 90% mental, 10% physical. Well, real estate's 100% mental. There is no physical component, which means you're not going to blow out your knee, your ACL, and lose your real estate deals. And once you get good at this thing, you can do it for the rest of your life. And nobody's born good at real estate. So even if you don't feel good at it now, you can become good at it with the right knowledge and the right experience.
Yeah, I think that's so important to understand, right? There's so many people, I think, starting out in real estate or any other business for that matter, who they'll see, the influencers out there or the people that they run in the same network, the same circles with, and they'll see how successful they are, but not really see that, everybody started pretty much at the same place, right? Not everybody
Yeah,
started bad at something before they can get good at it. So I think you just pointed that out perfectly right there. Is that you have to start out bad at something before you actually get good at it. Would you say that's the case?
yeah, yeah. You have to be willing to kind of be really bad at something for a duration of time, and or to put in the right work. So, how could you get a lot better? Well, a lot of your professional athletes, they had trainers when they were in high school. They had guys who had the knowledge. They had essentially mentors, paid trainers, somebody with knowledge, with expertise that knew the drills, that knew the style of play to get them to the next level, so they get there much faster and on a more guaranteed basis than somebody who, their uncle's trying to teach them how to play and halfway knows. And it depends on your guidance. So having the right guidance will get you where you want to go a lot faster, but putting in that work is a requirement either way. If you don't have the right guidance, then you have to put in more work and go through more hardship. So, but you do need that delayed gratification to win in this game.
Yeah, absolutely. That's one of the most important things I think when it comes to building any type of passive income business or any type of residual income in your life, to have that freedom that I think everybody, especially in real estate, are really aiming for, is what you said right there, delayed gratification, right? You're going to put in the work
Absolutely.
up front, but you're not going to see the results immediately. You're going to see it maybe a couple of months, maybe a couple of years down the line. And that's the cool thing I think about real estate is, it's all delayed gratification, but once you put in enough work up front, you're going to be grossly overpaid for, I guess, the lack of work that you're doing later on. So
Yeah, nobody. That's the funny thing I tell people about real estate is no one will pay you as much as real estate will pay you once you get the hang of it. And once you hit that realization, it's kind of funny because there is no path back to the 9 to 5 after that. If you for a lot of people, it's like if you could knock down 100K on 1 or 2 deals a year, and that only took you 3 months, you would never be in a position mentally where you could work for someone again consistently. You might work to get more capital to then put back into real estate, but you can never really go back to the pure employee mindset once you taste that type of financial freedom.
yeah, absolutely right. And at the point, you probably don't need to go back to being an employee anymore. You're probably somewhat set there, right? Because you already put in the work.
Yeah, you put in the work and the real estate will continue to pay you. I mean, the US tax code was written for landowners and business owners. As a real estate investor, you're both. So you enjoy a lot of these tax benefits that are out there that the average employee will never see. Employees get taxed the worst. So yeah, there's just no path back. Any way you look at it, from taxes, from income, I mean, you could break even on a property and still benefit from a tax standpoint. So yeah, there's just no path back once you get a little bit of freedom there.
Yeah, absolutely. And that actually brings up a pretty good question as well for a lot of people is, there's not as many people that I know of who just kind of jump into real estate, full time with both feet, going to the water, if you will. I think you were the same way, right? You mentioned that, you were working your commission based job and then also pursuing real estate and then it just sort of transitioned from there. So for people who are currently in like a full-time job, maybe they're commission based, maybe they're just a full W-2 employee, what would you say is like a good kind of balance between, needing to keep your job and keeping your income so that you can pay for your expenses versus spending your time and, taking the money that you're making to invest it into your real estate business? And what would you say is a good, I guess, period or point in time that you can actually transition to be full-time out of your job into full-time real estate?
It's a good question because a lot of people want to get into real estate and they're like, I hate my job. I just want to get out right now. And that may be putting too much pressure on the real estate. So if you jump right out of your job, I'm not saying you won't be successful in real estate. You could be, especially with the right guidance. But there's going to be so much more stress within that process. And you don't need to add stress to real estate. Real estate is plenty stressful enough by itself. The best path in an ideal world is to work for as long as possible. Because what will happen, this is the switch you need to make. It is not a physical, reality is changing around me shift. It's just a mental switch you have to click on. And that shift is my boss is now my partner and they're funding my real estate empire. You have to start to look at life that way because that becomes the true reality, which is I'm here because they are a partner that is providing me with capital to go build my dream empire. And once you have that mental shift, you could instantly stop hating your job because now your job has a purpose beyond just your pure survival and being like the bane of your existence. Its purpose now is to fund your dream. So when you have that mental realization, I'll call it, because it is the true reality. That is now what's going on and why you're showing up to work every day. You don't hate your job. You can do it for much longer because the stress now, see, what we're talking about is where you're placing stress. If you jump out of the job and then jump straight into real estate, but you haven't corrected your stress issue, the stress is just going to follow you into real estate. And now you're going to hate real estate, right? But you also hate your job because your job is unbalanced. You don't have the real estate there to balance the job. So now you're overstressed about your job and you hate it, you resent it, and it's very stressful for you. When you have real estate on the side, now your job is not as stressful. You don't hate going and waking up in the morning. So you will actually do it for as long as possible. You actually want to stay working until you get to the point where you know your real estate operation is going to collapse if you don't go full time because it needs you. It will start to pull you into it because it will become a bigger force than your job requires. It will be something you can no longer just do at your lunch break. And once you hit that point, now you know you've already got one foot out. It's only a matter of time. You're probably about 12 months out from that point to being able to make the full leap comfortably. And then you ramp up your real estate activity to replace the part of your income that you've left on the table, essentially. So it's kind of a series of realizations. One is my partner, my boss is my partner. This job is now my partner, funding my dream. And then two is if I don't leave this job, this distraction, and focus on this real estate is going to collapse at this point because it really needs me. And once you feel needed in that way, you have to jump. And it's the right reason to jump. It's not out of resentment of the job. It's out of necessity for the empire. So it's more of a pure motivation.
Would you say it's more of a mindset shift then for a lot of people that they need to switch the way they're thinking between, a negative path, which is I need to get out of this. This is why I need to own my own business, do real estate, or versus a positive path, which is I want to do this because it's going to create more joy, more freedom in my life.
Yeah, you have to choose the positive path because anything you do on this planet, there's going to be good aspects to it, bad aspects to it, things you like, things you don't like. You have to choose the positive because how ironic is it for you to hate your boss and then become a boss, right? Because then you start your real estate company, now you're the boss. So when you carry that resentment energy or you're on that frequency, you're not going to attract the right people to work with you because no matter who you are, a lot of people look at me like I'm Superman because of what I can produce and how many deals I can do and the reach I have. But I have really good people around me. I have great contractors around me, good support staff, around me, and that's why I'm able to do this. But you can only attract the right people from the right, frequency of energy. If you're at the wrong energy level and you're just super negative, you're going to attract other employees that now hate their boss, which is you, and you're going to get a bad production out of it. You want to go in for the right reasons and just always kind of have that because how you do anything is how you do everything. So it's going to come out in your recruiting. It's going to come out in your onboarding. It's going to be there.
Yep, absolutely. And I think there's so many people out there, right, I mean, you can touch on this as well. Like, do you think that's one of the reasons why there are people who maybe they come from that mindset of resentment, right? Of needing to get out of their job, of needing to eliminate the stress or always feeling stress all the time. That's why they jump into real estate. Would you say that's why, somebody never really fully makes the transition or are not able to do it successfully? It's just because they're always in that negative frequency, and then they always seem like, there's something coming down on them where they can't get out of, and they're really just kind of creating it for themselves.
They're creating it, yeah, and they're also, when your motivation is out of that like desperation mode, you're much more likely to get burned, like by a contractor or some scam guru, or like you're more likely to run into a situation where you get burned because you're acting off of the wrong emotions, versus more of a logic based approach. So I think people have to do some self assessment and say, well, what do I really hate this job, or am I overly dependent on it? And I resent my dependence on this job and that I haven't created something new. You don't have to be extreme, though. A lot of us are extremists, myself included to a degree. But being too extreme and just jumping into real estate without knowledge, I mean, like I said, if you have the right mentor, you can do it and try to be very successful. But without knowledge, a lot of people are just extreme, jump, and they just don't have any information, and they're going to get burnt because now they're desperate, they're hoping, and somebody's going to come and prey upon that hope.
Yeah, absolutely. And I think, being in real estate, especially with such, the amount of risk that's involved with, buying properties and rehabbing them and making sure everything's going right. Would you say, that first deal is so important, right? That you make sure that you get everything granular and correct, because it sets the tone. If that first deal collapses you, you're never going to want to do real estate again. But if it goes right, that's what sets the tone for the next one and the next one, and so on and so
That
forth.
that is so true, and that's what I tell everybody. Like your first deal, you want it to be your best deal. If you can make your first deal your best deal, every other deal is going to go, it's going to go well for you long term. Like even if you run into a rough deal, long term you're going to do fine because you're going to have that base. You're going to know for a fact this works. I just got to keep getting it right. I just got to keep hitting singles. But if you start off bad, it's, most people never recover. Like my first big project, not my first deal, but my first big development project, I had a contractor run off with 40 grand. And I was lucky enough to have a lot of capital saved because I just didn't, I still really do not spend money. I only spend money on business or real estate, but I don't spend money really on myself or anything. I'm not going to buy a Lamborghini. Like that's just not me. But I was able to recover. But most people cannot recover from a $40,000 loss, then have to dig in, another 50,000 to 100K to recover that and kind of keep it moving. So I survived it, but what I learned from it was I got to get serious about this. I really got to get serious about construction, becoming my own GC and doing my own projects because I can never let something like this happen again. It was actually part of the reason why I built, out my mentorship program and the course content was to protect other people from like getting burned and just from, not knowing the ropes and kind of going out into this real estate wild west. And it is the wild west.
Yeah, absolutely. You see that a lot, right, out there, that there's not as much of a kind of like a step-by-step instruction for, investing in real estate, or you know, being a real estate entrepreneur, as someone who's brand new. There's not, there's a lot of, I guess, gurus out there who teach information that may or may not be correct, but finding the right mentor, kind of like going through that course material, like the one that you're creating as well. I think that's going to be really helpful for people out there. So when you were first starting out, did you have something like that as well, or a mentor that you could follow that, maybe that could help you along the way?
Yeah, like I had mentors and I talk to people about, mentorship all the time because my perspective, and I've had some great mentors, right? Some people that gave me some principles that have stuck with me for the rest of my life. But um, mentorship comes in two forms. There's paid mentorship and free mentorship. I've had some great free mentors, but from a time perspective, they're very busy. You're lucky to get them to a cup of coffee once a year. And there's only so much game you're going to get in 15 minutes, at a cup of coffee or a quick phone call. There's not that dedication. There's not my free mentors. Guess what? They don't have a program to say, hey, Brian, here's what I did for every year in the last 20 years. Here's exactly how I did it. Here's all my skill sets that are in my head. And here's how you can replete my blueprint. It doesn't work like that. When you have paid mentorship, you can actually get that level of access and dedication and commitment to your journey So you can actually get faster results. I've gotten faster results from paid mentors. Like if I wanted to learn how to do YouTube ads, I'm gonna go get in a guy's course who's done $100 million of YouTube ads, and he can break down for you micro lessons that are going to take you to the next level. So I found that to be kind of the way, long term. If there is an easy button and a shortcut, is finding the right paid mentor and getting direct access to the knowledge in a way that is customized for how you accelerate, how you learn. If it's hands on, if it's self study, however that works for you, that's the easy button. The free mentors are good; they make you feel good, but in terms of access, there's limited access, and therefore you can't accelerate as fast. Even as somebody with, the right course content or the right program that they're tapped into. So you definitely need mentorship. It's just a question of which type and for which purpose. So that's something to keep in mind. It's just really something to keep in mind as you're searching for mentors.
Absolutely, right? So it has to be a give and take. You can't, a lot of people, I guess, expect free mentorship to help them with everything. But you got to think from the other person's perspective as well, right? They're a busy professional, right? What are they getting out of this, right? So how are you able to provide value to them as far as a trade-off between them giving you advice, knowledge, and information? What can you do for them, right? So sometimes that could be, working for free. Sometimes it could be being part of their team. But whatever it is, there has to be a give and take. It can't just be one-sided, right? Then you're not
Exactly.
getting what you want.
Exactly. That's the 100% it.
Yeah. So I think switching gears just a little bit here. So we mentioned in the beginning of the podcast that your main strategy for investing is the BRRRR strategy. It's definitely a very popular strategy amongst the investors out there, but it's also very difficult strategy as well. It's not like buying turnkey properties. So is that something that you just started out with BRRRR properties, or is that something you kind of worked into? How did you get to that specific strategy?
Yeah, I started off turnkey. I started off with a turnkey house hack on a duplex with a knock-in basement unit, like a legal basement unit that I was going to live in. And that was how I started off. It was just like grab the keys, put some touch-up paint on the walls, hand them to the tenant, collect the cash flow. And that is the best way to go, because when you're just starting, you need to believe beyond a reasonable doubt that if you put your hand out at the first month, somebody will like pay that because you're the landlord. Once you crack that code, that mental disbelief, because a lot of us don't believe that somebody will pay us, even though we might pay our rent or pay our mortgage every month. So doing that was good, and that got me kind of hooked on it. As I got to my second and third deal, I would call them cosmetic renovations, more cosmetic. The fourth, fifth, and sixth deal were all on one block. One was a burnout, one was a tear down, one was a gut job. And that was where I got burned by the GC. Kind of everything went wrong. The money went crazy. Had to start working with hard money lenders. Like a lot kind of went into that. And that was when I started getting to the BRRRR strategy. What I will say is the BRRRR strategy is the unlock button, essentially. Like that will just unlock your cash flow, because you're now recycling your capital. When you're going turnkey, you're parking down 20, 30% down. And now it's a question of how long does it take you to save 30, 40, $50,000? How many years is that going to take, or how many months for the average person? Once you get into the BRRRR strategy, you're now recycling. So now you have 50,000. Can you put it in a deal and refinance back as much of that money as possible? Let's say you put in 50 and then you could only pull out 40, 10 got locked up, but you walked away with 500-600 a month in cash flow. That's a like 70% cash on cash return, 72% cash on cash return annually. You're going to get all your money back in a year and a half, and you can just keep recycling. That's much better than taking $40,000 of that 50 and parking it in a deal. So now you can get more deals in less time with that BRRRR strategy. It is more challenging. There's a lot more wrinkles to it. It's why you definitely want mentorship within it, because many things can go wrong within the BRRRR strategy. You truly need guidance through, I would say, your first 2 or 3 deals, and then you'll get the hang of it.
Right, absolutely. It's a great way for investors to be able to recycle that money, right, and also keep the properties. I think a lot of investors, the big problems they run into is not having enough capital to be able to keep as many rentals, so they have to do a lot of more flips, right? So make sure the capital is recycled and they get it back. both BRRRR strategy, you're able to do that. But you're absolutely right. I mean, it is something that a lot of people tend to, I guess, mess up if they're not doing it correctly. So
Yeah.
from what you've seen, right, both in your experience and in people that you're working with to, who are just getting up and going and using the BRRRR strategy, what would you say is the biggest mistake that you're seeing people make when it comes to BRRRR investing?
There's two big mistakes that you can make with BRRRR investing, and it's part of your variables. One is you don't know how to think like an appraiser, so you don't know how to value your property. So if you get your values wrong, everything's wrong because it's all a derivative of the after repair value, the ARV. So not knowing how to think like an appraiser is just going to jam you because you're going to naturally overvalue the deal. And then the valuation, the appraisal is going to come in lower and you're going to have a lot of money locked up in that deal. The second is the cost of construction. Most of us don't know the cost of construction. You have no idea how many wholesalers, realtors, architects, engineers, they have no idea what the cost of construction is. No clue, not a clue. And if you don't know the cost of construction, you're going to go in with a lower rehab budget than is necessary. And then the budget's going to run over and you're going to have a lot of money locked up in the deal if you don't run out of money because you thought this was cosmetic. It ended up being a full gut job. So what happens to most people with no mentorship is they do both. They overvalue the deal in terms of the appraised value and they undershoot the rehab budget. So they go over budget and then the deal appraises for less and they have double the money trapped in the deal. So the job that I have when I'm working with people is really to value that deal appropriately and then teach them how to build these rehab and construction budgets. What's the cost of construction? How long is it going to take? What are all the numbers in the deal, the lending cost, the closing cost, the transfer taxes, so that you're having a clear assessment of the deal and then buying it at the right price that's going to be profitable. That's why they say you make money on the purchase because you have to have all of these variables in check and then buy at a price where it's all going to make sense at the end of the day. So that is the difficulty, is having the knowledge and skill set to dissect the deal and be able to see what the profitable price is. If you could just see that as any investor out there, you could do deals all day because you'd never buy a deal that wasn't profitable.
Right. Absolutely. Right. I think so many people, they, like you said, they're not valuing the deals correctly. They're creating these numbers and metrics in their mind and really tying their own emotions to it. And
Oh
again,
yeah.
sometimes it goes back all the way to mindset, right? It's like maybe somebody's so desperate to make money in the deal that they're overvaluing it and they're not seeing the truth. And that's what really tanks people. So I think that's a really good piece of advice to watch out for. That's the appraisal and the cost of construction. You don't want to tie up too much money so that way you're not pulling enough out of the deal and you're not stuck again. And we're back in the position that, we're just talking about if investors not having capital to play with.
That's exactly what it is. It's it's getting stuck in that cycle and just, making those mistakes, running out of capital. This is what happens to people. And this is why I was just talking to somebody yesterday and they were in a deal. They were kind of asking about my mentorship program, but they were in a deal. They ran over budget 40 grand because the GC said they knew more than they really knew. And as they got into the project, the guy just completely was like, I don't know how to do any of the mechanic lines on this property or what it costs. So they ran way over budget. And talking to them, I'm like, well, you get the value of mentorship. And they're like, well, yeah, you could have saved me 40 grand on this project. And that would have been multiple, of returns on the cost of mentorship. But somebody who's never done a deal before, they can still live in their head and think what can go wrong. And, oh, it won't be that bad, or I'll figure it out. I'm smart. Nobody figures it out. You're not Neo. You're not the one. You're not the chosen one in real estate who's just going to come in, figure it out from scratch and not get knocked around. This is a very unforgiving game. So those who, we'll say you have to pay the ignorance tax. Those who don't know pay the ignorance tax in real estate. And that ignorance tax could be thousands or tens or hundreds of thousands of dollars, depending on the size of the deal.
Yeah, absolutely. It's a really capital intensive business. So that's
Oh yeah.
going back to mentorship, right? That's, you got to think of it that way. And that's a really good point that you brought up, right? So if you spend maybe, 5, 10 grand in mentorship, that's really pushing it to the kind of higher end. That could save you, 40 or 100 grand in mistakes that you might not have made if you've gone to the mentorship. So you want to think about it like that as an investment to keep more of your money. So,
Yeah,
for somebody starting out, right, would you rather lose 50 grand or would you rather lose, 5 grand for a
yeah,
mentorship program that can really help you out?
absolutely. And a good mentor is someone who's successful through survival, essentially. That's like the best mentor possible because they've been through some mess. Therefore, they can guide you on how to avoid all of that drama. They've made half a million or $1 million worth of mistakes. That's who you want to learn from because they've done it and they've lived to talk about it essentially and can tell you, look, don't do this, don't go down that road because it leads here. But definitely, I mean, most of the guys I've spoken with that are highly successful at real estate today have all made at least 100,000 to $250,000 of mistakes, and that's if they're lucky. Many of those people have made over $1 million of mistakes, myself included. So doing that just gives you invaluable experience, and you don't want to be making these mistakes. There's not as much learning and all these mistakes on an individual basis as you would think. Like, what do you learn from getting burned by a contractor for 40 grand? Don't give up the money. But I could tell you that, and you could keep your 40 grand, right? I can teach you that so that you don't have to go through all the pain, but you still get the value.
Yeah, absolutely. Yeah, I mean, I think the phrase goes or the saying goes, smart people learn from their own mistakes, but the smartest people learn from other people's
Other people's mistakes.
mistakes.
Yeah, exactly.
Yeah,
Absolutely.
yeah. That's awesome, man. So, as far as different strategies goes, I know we were talking a little bit about this before the podcast, even. So, one of the interesting things that you were able to do with a lot of your investments, the interesting strategy that you implement is co-living. So, essentially, dividing the property up so that there's individual units within one property, so that you can rent it
Yeah.
out to more people. So, would you mind touching a little bit on that? Because I think a lot of investors they know about it but they don't necessarily know how to operate it or how to, what the legalities are for renting out a single property to multiple renters, so that way they can collect, more rent.
Yeah. So the overall philosophy of co-living is that people today want to live differently and have different needs. And we're seeing that like everybody's on their iPhone, everybody's on their laptop. People don't even watch TV in most households anymore. They're just on their laptop watching YouTube or some type of TV show. So because people aren't living in a lot of these common areas anyway, and you have younger generations who can't afford to go out and rent a 3 bed, 1 bath in most major cities, you can now redesign properties in a way that undercuts the studio market in terms of pricing. If you go to Center City anywhere, and let's say studios are renting for $1,000 a month, you can create a co-living property for a single family in a place like Philly, we'll call it. You can rent to no more than 3 people not related by blood. That's kind of how it'll be written from a legality standpoint. In Baltimore, that number is 4. In Atlanta, that number is 6. In Texas, it's actually tied to the amount of bedrooms in the property. So you can do double the amount of bedrooms. So if I build a 10 bedroom, I can do 20 people, in a Texas property. So wherever you're at, it'll be different. So I take a 3 bed, 1 bath. It might rent for 1,250 a month, 1,300 a month in Philly, in certain parts of Philly. I can now gut renovate that. So let's say it was in rough condition anyway. I was going to renovate it anyway. I'm going to reframe it into 3 master suites, 3 beds, 3 baths. The only way to get to the bathroom is through the bedroom. I'm going to shrink down the living room, dining room, kitchen into just an eat-in kitchen, essentially, maybe with a breakfast bar, internet included, utilities included. I can now rent each of those units for about 800 a month. So now I got 2,400 a month coming in versus my neighbor who's got 1,300 a month coming in. Now that extra 1,100 a month in income, that can be used to offset rising interest rates, like we're seeing today, and still create much more profitability in terms of cash flow. The property management piece, if you're doing it correctly, is no more difficult than doing property management on a triplex, quite frankly. It's no more difficult. There's a lot of stigma, there's a lot of fear behind it because we're always afraid of the unknown. But as someone who's managed hundreds of these co-living, units, it is not that difficult. It's very straightforward. There's a process for everything. You just need to learn the process and the ropes and how to do this. But everything, the way that I do it, is 100% above board, legal. All the buildings are built to code with architect plans, stamped by the city. Um, all the leases are evictable, so you can go right in front of a judge and file an eviction and do whatever you have to do. All the paperwork is together, and it's compliant with the zoning codes for the cities where I do this. So it will not exceed, more than 3 people not related by blood within a single family residence. So it's all just about doing. You never want to build something to scale that is not done by the book, because eventually you're going to get discovered, and once you do, your whole portfolio is going to get wiped. It's one of the same reasons why I wouldn't scale Airbnb in a certain major cities right now, because it's only a matter of time before some regulation gets passed where they ban Airbnb in your city, and now your whole portfolio is wiped. And if you don't have another exit strategy, you're in between a rock and a hard place at that point. So that's co-living. That's why people are looking at co-living, because you can increase your cash flow per asset and therefore offset things like rising interest rates and some of the things we're seeing today. Even though I think rates will be going back down, next year, and you can have some nice refi opportunities. Increasing your cash flow, what it'll allow you to do is outthink the competition. So now the person who can only get $13.50 a month out of that property, they're just going to tap out when interest rates hit a certain point. But if you have another strategy, now the competition goes away, and it's just you left, or people that think like us with co-living, who can go in and navigate these markets. So now we can play Monopoly and just grab up 10, 20, 30 properties while everybody's sitting on the sideline.
Absolutely. It's a super interesting strategy for sure. I think it works really well, especially I think for a lot of investors, they tend to want to do this more in like college towns, or
Oh yeah.
properties in their colleges, right? Tons of people wanting to do this, right? College students want to pay a little bit less rent, maybe live with some friends. So it works great. And I think, you're absolutely right, right? It gives you better margins. You're making more money on the same property that another investor right next door with the exact same property is making, really just half of what a co-living property is making. So
Yeah.
really good advice there. And especially on doing it by the book, right? The more complications there are, the more you want to make sure everything is on the up and up, and making sure everything is done correctly, everything is done so that there's no problems, no issues at all. Because you're absolutely right. When you start scaling up, it's like, I think
Yeah.
there was a phrase that was said. It's like it's when the tide goes away that you see who's been swimming naked and who has their trunks on. So.
Yeah. It's not how good you're doing, it's how long you're doing good. And if you want to be doing good for a long time, you better be compliant by the book and be dotting your I's and crossing your T's. Um, or else it's going to catch you. And it's the big targets that are easier to hit. When you're just a little fish, you're doing 2, 3 deals, you don't even get any break-ins. You don't get anything. Try doing 50 deals. Your surface area exposure is so great. One of those 50 properties is going to get a break-in, and I don't care where you're at in the country. You could be in the A-class, best neighborhoods. It's still going to happen because of the volume of deals that you're working on at a given time. So when you're thinking about getting started, you always want to think about scale. Is this system scalable? If the system that you're doing now is not scalable, throw out the system. Throw out that baby with the bathwater. Like, get rid of that system, because it's not going to be good for you. You're going to become reliant on it, and then it's going to fail you at scale. So you always want to start off with scale in mind, and you'll be more successful.
Yeah. And it's a good way to think about it as well, as far as being able to remove yourself from the business eventually. Because I'm sure everybody who is in real estate one day do want to enjoy the business that they're building, the income they're bringing in. So they don't want to necessarily be tied down to their business. So when they're designing their systems, right, thinking about, can this be duplicated at scale so that one day I can actually remove myself from the business and it just runs on its own.
Yeah, no, that's the American dream in a nutshell. And that's what I tell people, like, there's kind of that word that floats around, or that phrase, passive income. And the truth of passive income is it doesn't exist. There's no such thing as real true passive income. It requires management. The question is, are you going to be doing the management, or are you just going to hire somebody to manage the assets that can kick off this cash flow? So that is the ultimate level, is finding those people. But then that comes back to mindset. You have to be of that wavelength to find good people, because you're only as strong as your people at the end of the day. We're all just individuals unless we can build up teams. My team can beat probably most people's team, even if they're better than me individually and could beat me individually. When I'm not working, my team's working. So we're just around the clock.
Yep, absolutely. That's so important. Building the right teams. I think that's the one skill that when business owners start out, they don't actually think about, but I mean, it's the most important skill if you really
It's
want
the
to
most
succeed.
important. Yeah, being able to hire correctly, and sometimes you have to fire. Um, I jokingly tell people you're not a real estate developer until you like fire your father or your father-in-law or something, something like that, like somebody really close where you have to do like a real close call. That can really grow you up a bit where you're like, I got to do what's right for this business or it's going to collapse. So there are going to be some judgment calls, and you need people to talk to about that stuff when you're getting started because it's tough. A lot of people hate their boss, but when you become the boss, you'll start to understand some of the pressures there and the decisions that have to be made. And not everybody's cut out for that. Not everybody can do that. And like you're saying, there's not always like a school or a system from that. A lot of us get that from sports. I was lucky enough from sports to be able to get a lot of that, working with teams, being a team captain, dealing with coaches, dealing with drama, dealing with ball hogs, dealing with envious players, dealing with players that are better than you, and how to support them and be a good support person to the other team leader when you're not there yet. So going through all those experiences at a young age, you don't understand what's happening, but it's grooming you to be a business leader, because that's what it is. That's what it takes to excel in that environment.
Yep, absolutely. Well, Brian, I really appreciate you being here. I think you shared a lot of great tips, great value, great insights into what you're doing and some of your mindset and what you've been coaching a lot of your students to do as well. And I really appreciate that you sharing that here with us today. For people who listen to this that want to learn more about what you do, maybe they want to be part of your coaching program or at least just follow you on social media. What are some of the best places for our listeners and our viewers to follow you, keep up with what you're doing, or maybe be a part of one of your programs?
You can find me on LinkedIn, Brian Grimes Real Estate. You can find me there. You can find me on YouTube, Brian Loves Cash Flow on YouTube. Easy to remember because I love cash flow. So Brian Loves Cash Flow on YouTube. On Instagram, Brian Grimes _ 247 CFU for the 24/7 Cash Flow University. We drop a lot of content there. TikTok is at Grimes Estate. All of these different channels will backlink to a free training on www.workwithgrimes.com/cash flow. It's a free training that will show you how to acquire properties for pennies on a dollar all across the country. So you don't want to miss out on that free real estate training.
Awesome. We'll make sure to leave all the links down below in the description and the show notes. But Brian, I want to thank you again for being on the show. Before I let you go, is there any last pieces of advice or tips you want to leave with us?
Yeah, just keep the main thing the main thing. There's a lot of distractions out here. There's a lot of shiny things and get rich quick things. The main thing is to keep the main thing the main thing. For me, the main thing is real estate. It will make you a millionaire. It will give you financial freedom and legacy, and just get you out of that dependent, kind of weak mind state where you just feel stressed out and like you're overly dependent on your job. So when in doubt, keep the main thing, and the main thing is real estate.
Awesome, man. Brian, thank you so much for being on the show, and we will see you on the next show. Take care.
All right. Thanks for having me.